Hey guys, Drew here from swingtradingbootcamp.com. Today is Wednesday, January 9th, 2013, and the market just closed. It's 10 after 4, and what I wanted to do is just take you through two of the trades that we put on at the end of the day and kind of walk you through our analysis of the trade. Here you see the diamonds. You can see that it gapped up in the morning. Strong day. Up until about 12 o'clock, then we got a little bit of a sell-off and started to sell off into that 3 o'clock time frame as well. But overall, a sideways kind of trading day. But right here at the end of the day is what we're going to focus on, because if you were watching the market, it looked like we were going to sell off and make new lows. Actually, the S&P dipped down below its opening print. The Dow was holding up, the Nasdaq was holding up, but right here, right at this 335 bar, and let me zoom in a little bit so you can just see, this is right where a transition happened in the market that we were watching. So for the Dow, for putting in our trend line, okay, for our next down channel, you can see that this big red bar had nice volume coming into it. It was a sure sign at the time that we were going lower and possibly going to trade to new lows. But as you know, if you follow our blog and if you follow our newsletters, you know that inside bars are our favorite, one of our favorite chart patterns to look for. So the next bar after the big red bar, we see an inside bar. Volume's not too impressive, so that tells us that the market is stalling and is trying to decide what it wants to do next. So as we're scanning around the market looking for stocks, we're also watching the Dow trade here. We always have the diamonds up, and we're willing to jump in a trade like this when we see a transition from a short channel to potentially to a long channel. So after we see this inside bar here, now our next thought process is what do we need to see for continuation lower, or what do we need to see for a breakout to the upside? And what we needed to see here was price moving higher, price breaking the trend line, and volume increasing to give us confidence that we were possibly going to rally a little bit towards the close. And that's exactly what we did. So again, we'll walk you through it. As we're watching this, we put in our trend line, we see a big red bar here on volume. The next bar walks out into an inside bar, giving us the indication that the market's stalling. And the next thing we see is the market actually turn. We get a nice candle pattern there that actually almost engulfs the previous bar. Volume comes into the diamonds here and pushes it through the top trend line. That's a sign for us to definitely get long. We can use the bottom of this bar or even the entry bar as our stop. So for the diamonds, 133.50. That would give us opportunity to hold into the close and hopefully for a nice trade. And that's exactly what happened. So the next bar after the entry bar, it walks out into even more volume. Price continues to go higher, and it was just that way into the close as well. Now, one of the other setups that we saw, and again, it was based on this strength, this little transition period that we saw in the Dow, and that was in Boeing. And if you've been following Boeing, the news on Boeing, you know it's been hammered the last 2 days. Here you see the complete day of Boeing, kind of a rally in the morning and then just sideways all day. But then here towards the end of the day is what we're looking at. Okay, I'm going to zoom in again, and this 76.55 to 76.60 level was the level that it was having difficulty with all day. So between 60, 55, that's what we're looking at. But towards the end of the day, we're watching to see if Boeing might have some strength that we could get into a trade. I'll just show you what we were looking at here, this little trend line that we put in. And as the Dow is selling off here, let me just pull that chart back up. As the Dow trades down here at 3 o'clock, we're watching to see what Boeing does. Now, Boeing doesn't make a lower low even. It doesn't make a new low, and it doesn't even go lower than the past swing low that we had. So we're watching it, and then we get a bullish engulfing bar here showing that there's some strength. And then we watch. You know, we're looking for Boeing to make a move to the upside, and it breaks this short-term trend line. The volume's good. You see the nice volume pattern of increasing volume here as it breaks the trend line. Now, we could have been aggressive, and to be quite honest, we actually missed that initial entry on the trend line break. But once it walked out into this area here and started to move sideways, that's really what we were concentrated on. So again, we'll go back to the Dow, and now we see that after 3 o'clock is when we get that bounce and then this 335 bar was the bar that the Dow started to show signs of going lower. So again, we'll go back to Boeing and we'll look for that 335 bar, and you see here that it's not really dipping at all. It's definitely not showing that it's going lower. It's actually going sideways in that big bar. Now these are little clues of relative strength that we look for in the market each and every day to give us the indication of whether or not a stock might be bucking the trend of the overall market. So Boeing, what you see here, we see the trend line break, we rally up here, and then we kind of move sideways. So we walk out into this sideways pattern where we have two equal bars. Okay, now we know we're at that 55 to 60 area that it's been having difficulty with, but what we need to understand is volume is going to come in at the end of the day, and the potential for this stock to rally because it's been so beaten up the last few days is high. So we're going to look for a good chance to enter, and also a good place to put our stop so we don't put too much risk on the table. So in this 335 bar, you can see that as the Dow ticked lower, Boeing's going sideways. These two bars are actually equal highs and lows. Okay, another good sign of strength as the market dipped there. These two bars are actually the high is 54 and the low is 48. So we felt comfortable if we put a buy on at 76.55 that we could comfortably put our stop down here at 76.47. So that's giving us a little bit of risk. It's giving us 8 cents of risk. So we know that the potential to make a 2-for-1 trade at least into the close is pretty high. All we were shooting for is somewhere above the 71 cent level for our profit target. And you can see on this bar here, as the market started to show signs of turning around there and breaking to the upside, Boeing took off through that 55 level. On increased volume, and it's just a beautiful volume and price pattern continued right into the close. So that was one setup that we saw based on the transition in the market, but I just wanted to bring that to your attention because these are, again, the little signs that we look for, these little subtle clues that the market gives you or the stock gives you, where you can actually look for these on a daily basis and make some good trades. I hope that was a help to you, and we hope to see you in the next video.